the SEC's basically said it's not a security, that's Bitcoin. Then you throw into the mix that kind of the news from BlackRock over the last week where they're like, hey, we're going to file for a spot ETF. And we have actually seen multiple other big Wall Street financial institutions filing for these Bitcoin ETFs. So it does seem like everyone that's giving confidence to people being in Bitcoin. And that dominance reflects that, I think.
Hello and welcome to Crypto Street, where we bring you the latest and most intriguing stories from the world of cryptocurrencies. In today's video, we'll be unraveling the secrets of Bitcoin's future. But before we jump into that, let's take a look at some recent developments in the cryptocurrency market. Bitcoin fell below $31,000 to start the week as traders seemingly moved to secure gains as the cryptocurrency became overbought. The Relative Strength Index, RSI, rose to its highest point since January, prompting bears to re-enter the market. Ethereum also declined, falling below $1,900. Following the spending of 50 Bitcoins from 2010 on June 15 after more than 12 years of dormancy, approximately 11 days later, another group of dormant wallets created in 2010 transferred 100 Bitcoins worth just over $3 million for the first time in well over a decade. 3. The Tax Administration of Japan has provided an exemption to companies issuing cryptocurrencies under a revision of the corporate tax rules. A local crypto media report described the move as a step toward improving the business environment for the digital asset sector in the country. 4. Jim Rickards, an economist and investment banker, has warned about the establishment of a social credit system powered by the issuance of a central bank digital currency, CBDC. According to Rickards, this combination could be used to restrict the civil liberties of Americans by limiting their capabilities to travel and their reach on social media platforms. 5. A UK citizen has been sentenced by a New York court to 5 years in prison for his role in a Twitter hack, including the hijacking of accounts of U.S. political and business figures. The man is also responsible for the theft of large amounts of cryptocurrency in a SIAM swap attack. 6. Jeremy Allaire, CEO of Circle, the company behind the issuance of coin USDC, has expressed his worries about the state of stablecoin regulation in the U.S. in a congressional hearing. Allaire stated that other governments were already regulating the issuance of digital dollars, dollar-backed stablecoins, and called on the U.S. government to act by issuing stablecoin rules. Now let's begin our enlightening discussion with Gareth Soloway and then go into the details of some of these events.
What we have here in technical analysis is called a wedge pattern, which is higher lows and lower highs. And so it creates, and you can see I have a couple of the other lines. This was the breakout line we discussed, where it was clearly breaking out once it got through that like 49% level. And then this is kind of the target zone that you and I agree on, which is that 60, 59%, where you have pivot point, and then that creates that trend line, and then the downsloping one going back to the dominance prior. And I think you made a great point is that, so many of these investors have come in after 2020 in terms of Bitcoin, so they don't remember a period when Bitcoin dominance was so massive, so dominant, if you will. And I think it's important because people are like, oh, well, the alts will at some point rally back. And that may be the case, but it may be longer than people think. And Bitcoin may be more dominant for a longer period of time. But when you have a wedge pattern like what we have here, the ultimate aspect is that you're going to get eventually these two lines. And I'm going to get rid of this one as well. But you see these two lines. And if I go to my weekly chart, you can see it even more so. Eventually price. So these two lines will meet at some point in the future, right? A triangle, you have the two lines getting closer and closer. And what that's going to cause is it's either going to cause a breakdown or a breakout. In this case, I would not be surprised to see a breakout in this scenario. Granted, it could still be 3-6 months away, but at some point, a wedge pattern like this is very likely to break out to the upside. So 60% will be resistance, but don't discount the possibility that it could eventually break through that and go back to previous levels that we haven't seen for years.
Bitcoin BTC experienced a slight decline as it dropped below $31,000 on Monday, reaching an intraday low of $30,042.38. This marks the third consecutive day of decline for BTC, coinciding with the Relative Strength Index, RSI, entering overbought territory. The RSI peaked at 72.92 of the weekend, prompting bearish sentiment and pushing the index down to 68.81. If a support level of 68.00 is broken, there is a likelihood that BTC could slip below $30,000. On the other hand, Ethereum ETH struggled to stay above the key level of $1,900 on Monday. After reaching a high of $1,920.08, ETH/USD dropped by 2%, hitting a low of $1,870.30. Although there has been a marginal rebound, the momentum for Ethereum has turned bearish, with the RSI currently at 57.75 and failing to surpass the $1,930 ceiling. This year, a noteworthy event occurred in the world of Bitcoin as 8-block rewards from the 2010 era were transferred out of wallets for the first time in over 12 years. The movements were detected by the blockchain parser to parser.com, with 2 of the transfers taking place on Monday, June 26, 2023. Interestingly, both block rewards were acquired on July 12, 2010, indicating that they belong to the same individual. The first transfer, confirmed at block height 795,936, involved the owner sending 49 BTC to a single address, while 0.99 BTC was transferred to another address. Both wallets have remained inactive, with no further spending of the Bitcoin. The second transfer occurred at block height 795,940 a few hours later, and all the funds were sent to a single address that currently holds 49.99 BTC. Additionally, the corresponding Bitcoin Cash BCH associated with these old coins has not been moved and remains inactive. It is worth noting that the first transfer of 50 BTC had poor privacy, scoring only 10 out of 100 due to 3 identifiable issues. This lack of privacy puts the involved parties at significant risk, as revealed by Blockshare.com. In contrast, the second transaction from 2010 demonstrated better privacy practices, receiving a score of 55 out of 100 from Blockshare's privacy tool, indicating a moderate level of privacy. The tool discovered only one issue, revealing that the funds were swept from a legacy address to a segregated witness SegWit address. While the identified issues are not as severe, they can still be exploited by tracking tools to trace transactions. It is worth noting that the number of 2010 block rewards spent in 2023 is considerably lower compared to the spending observed in the latter half of 2020 and into 2021. For instance, between January 1, 2021 and September 28, 2021, a total of 152 block rewards from 2010 were transferred. The decreasing sightings of 2010 block reward spends suggest that such occurrences are becoming increasingly rare. Jeremy Allaire, CDO of Circle, a US-based stablecoin company, recently emphasized the need for stablecoin regulation to protect the country's control over the issuance of digital dollars. In a congressional hearing, Allaire pointed out that other nations, including the UK, Japan, Hong Kong, and Singapore, have already established frameworks for dollar-backed stablecoins, leaving the US falling behind. Highlighting the urgency, Allaire warned that the lack of regulation could have devastating consequences for the competitiveness of the US dollar in the digital age. He took to social media to reiterate his call for action, stating, "It's time to act." Circle is the company behind USD coin USDC, the second largest stablecoin in the crypto market with a market cap of $28.3 billion. However, in March, USDC experienced a depegging incident when Silicon Valley Bank, SVB, holding 8.8% of the total reserve backing the stablecoin, faced difficulties. The depegging caused the price of USDC to drop as low as $0.85, but it was later resolved by ensuring that all SVB depositors would be compensated. Allaire stressed the importance of establishing clear rules to prevent similar incidents, advocating for full reserve digital currency banking that would mitigate risks associated with fractional reserve banking. Stablecoins have emerged as a significant component of the cryptocurrency market, witnessing a notable increase in their utilization. According to Kaiko, a cryptocurrency market data provider, stablecoin transactions now account for 76% of all cryptocurrency transactions, marking a 16% rise since the beginning of 2022. On June 8, House Financial Services Committee Chair Patrick McHenry released a draft of stablecoin legislation, signaling progress in addressing the regulatory concerns surrounding stablecoins. That wraps up today's crypto news highlights. Stay tuned for more updates, insights, and analysis from the world of cryptocurrencies. Please share your thoughts in the comments below. Don't forget to like this video and subscribe to our channel for more engaging content.